Well, hello traders and investors. My name is Roger Scott. I'm the head trader for WealthPress. Today is Thursday. It is the 10th of December. No, I don't know where this year has gone. But again, we're starting with the overnight data. The market's going to open up in less than an hour. And this is what I've been doing. I've been trying to show you guys how it's the rest of the world versus the NASDAQ. As you can see here, S&P down only about 6 points, Dow about 17 points, Russell barely even down. But look at the NASDAQ, down 52. That means that means other indexes are outperforming the NASDAQ. That means today we're looking at going back to the going out environment versus the stay-at-home environment. If you see the NASDAQ leading, that means we're going back into the stay-at-home environment. But again, the NASDAQ has been really overbought, and I've been telling anybody who would be listening to me, or anybody who listened to me, I said that the market has been overbought. I've been talking about the put-to-call ratio. I've been talking about the divergence between the RSI oscillators and price action on the major indices, which I'll show you as I'm talking about. Here, I'll show you everything so you can see my warning signs, okay? So let's start with the SPY. I don't want to say I told you so. I'd rather just show you what I mean so you could learn from this. All right, so see that? Higher price, divergence, that's a red flag. And we were overbought. Same thing on the QQQ. Higher price, right here, you could see higher price. Momentum, lower. Momentum levels couldn't rise, but price could. That's bad. When momentum levels can't go above price, that means markets are overbought, and they're overbought in terms of momentum independently anyway. So both the NASDAQ and the S&P overbought based on momentum levels, okay? Then I explained to you, let me go to stock charts, and let me log in here real quick. Remember I showed you the put-to-call ratio yesterday, and I showed you that it was right around here. It was right around 65, and I told you that the rubber band is really stretched out, and we need to go, it's going to snap. It did. And finally, let's go back here. Momentum levels. I've been barking and telling you guys that momentum levels, it was at 90th percentile. We had the highest momentum levels on the NASDAQ in 11 years, as you will see in a second. Here's a 10-year chart. There you go. See that? Look at that. We went right here. Look at the whole bar. Right here is the last time we cut through it. Let me go to max. Maybe it'll be better. So as you can see here, momentum levels, and if you look long-term, they're just overbought. There's 88 stocks out of 100 trading above the 200-day moving average. And when you go to the 50-day moving average, it's cooling off already because of yesterday, but it was above 80th percentile. Notice it's cooling off right here. So take a look at this. Notice how it's going down. All of these three things, the put-to-call ratio, the number of stocks trading above the 50 and the 200-day moving average, and divergence between the RSI and price, as I showed you. So now we're cooling off. I just wanted to kind of go back and explain to you the evidence or the proof or the factors that I look at to show the market cooling off or that it was stretched out. And yeah, the market's cooling off right now. The NASDAQ is down, as you can see right here, and the S&P will more than likely follow through as well. Now, why is this happening? Let me explain to you. Are you ready for this? Are you ready for this? Look at this number. We got 853,000 jobless claims, all right, this week. The number went to, the 4-week moving average is at 739. We're at 850. We're more than 100,000 more. That's bad. We're going back up. We're going back up to where we were in like April, March of not March, but April, May, June, something like that. We're going back. We went from a little over a million, this is to the best of my recollection, down to about 700,000. We couldn't break 700,000. The consensus was between 693 and 800, and we're at 853. This is very, very negative. This is very, very bad. Why is this happening? Well, let's talk about global economy. World markets were mixed Thursday, extremely overbought, as I pointed out, after selling of technology and healthcare companies. Shares ended a winning streak. I've been telling you guys to go from stocks to ETFs for 2 weeks now. As COVID-19 vaccines move closer to distribution, markets have been pushing higher, But there's only so much they can go, right? On hopes that the pandemic will begin to ease, but it hasn't happened yet. All these vaccines that are going to be coming out, vaccine from Pfizer and German partner BioNTech, which is already in use in the UK, is on track for positive review and potential approval in the US within next week. But I'm telling you, it's going to take a long time for people to start really getting it and us feeling this in terms of the economic impact of it. The recent surge in COVID-19 cases in many countries and tighter restrictions on businesses to counter them have again raised the importance of the vaccine and for more help for beaten down businesses. Overnight, the S&P fell. It's down right now. Investors are closely watching for development on another shot of stimulus for American people, businesses, and state governments. Don't hold your breath. I'm hoping it'll happen before the election, but it may not. Congress is still divided over the size and scope of the new package. The Trump administration's latest proposal is for $916 billion in support, which would go a long way. Crude oil is above the price that U.S. frackers pay to distribute the precious metal. So again, to distribute or work with the energy. I don't know why I'm talking about precious metal. It's been a long few days. The market's been really overbought. So again, we're near $45, $75 a barrel. I think they pay roughly $42, $43 a barrel to start processing it. So again, the energy market is not bleeding, but again, the supply demand is completely out of whack. There's just way too much supply of crude oil in relationship to demand. Now, as you could see here, the NASDAQ, which is now down 70 points. When we started this, it was down 50 points. But if you look at the NASDAQ, which is not doing well, you will see, this is the futures, by the way. Let me just go to 1 month here. You could see that it looks like we're going to go further down. And I wouldn't take the opposite bet of the fact that it's going to hit the 50-day moving average. Everything is pointing to a minor correction. Take it easy. I'm not expecting anything major, but there's a good chance we'll have a minor correction, which is why we want to pick the lowest hanging fruit. If the NASDAQ 100 is overbought, there's fears of us going back to where we were last year. The market broadly is fairly weak right now. The best thing to do is try to find the weakest stocks. So we're going to go to our 90-day breakdown list. This is our breakdown list, and we'll go to 90-day lows. And here you could see every stock that's making a 90-day low. And for a stock to make a 100-day low and 200-day low and 300-day low, it's got to start with a 90-day low. And I like 90-day lows because 90-day price action tend to, the breakouts, either up or breakdowns, tend to be more meaningful. And they're not as false as when you have a 30-day or a 60-day window. So some stocks that I'm looking to short. Now, some of these are a little overdone, like Dominion Energy or American Tower Partners. But let me show you a few that don't look so bad to short or buy puts on. SPLK, look at that. Broke the trend. It's at the 50-day line. It looks like this thing is going lower. What I would do is put a sell stop right around the 150.70 level and see if it breaks below this level. Let the market take you with it, and if it goes above this price action, you would cover it. Another one that I like is XP. It looks like it's about to break down. Again, I would put a sell stop right around the 36.80 level maybe and cover it if it trades above this trading range. These are all low-risk trades. Again, a lot of these look overextended. Here's another one that I like, XEL Energy. Not a bad, look at that descending triangle right here. You could see it. Broke a little low. I would place a sell stop at 64.60, say. And if it goes to about the 67 level, I would cover it. Then I would look, and again, there's a lot of stocks here, but a lot of these look like they could be oversold, excuse me. Like this one, for example, Quest Realty Trust. I mean, that looks like it may be overdone. But this one, WST, West Pharmaceuticals, look at that. Just broke down a little bit. Sell it, say, on a sell stop at 258.40. Cover it around the 275 level. Doesn't look too bad. And lastly, this Equifax. This Equifax looks like it's going down. Put a sell stop around 672.40 maybe, and cover it if it goes above this level. It's a pretty wide-ranging stock, so don't use a lot of shares or just buy a put option. Again, this SBAC, the Regeneron, Cone, I think they may be a little overdone. But I like West Pharmaceuticals. I like Splunk for a short. I like XP. I like XEL. And I like Equix. I like these. So again, if I was a betting man, I would go with the low-hanging fruit. The low-hanging fruit right now is on stocks that are breaking down from this upside. And if you've been taking profit on the upside, the best thing to do is slowly get out of 50%, maybe liquidate the stocks, move into ETFs, then move out of ETFs and move into cash, and then move into shorts. So that should have been the process over the past few weeks if you've been paying attention to me. Now, I hope you're paying attention to me right now because thanks to a mysterious event that occurs every Friday, 4:01 p.m. Eastern Time, a minute after the market closes, a select group of traders have the opportunity to collect hundreds, potentially even thousands of dollars in profit every few days. There's a potential there. The kicker, most folks have absolutely no clue that these phantom trades even exist. But live trade profit head trader Josh Martinez and I have developed a proprietary trading system specifically designed to isolate these recurring market phenomena. Every Friday, 4:01 p.m. Eastern Time. It works well. You got to check this out. You really should check it out. And we'd like to include you in our market beating strategy. I really would. I think you're going to love this. Low risk, high probability, just what you guys are looking for in this type of market environment. Click on the link below to join us and learn how you can get on this potential profit. Learn how you can make some money, potentially, hopefully, right? There's no guarantees on Wall Street, but if you can put the odds in your favor, that's the key. I hope it helps, and I'll talk to you soon. Post comments. I want to see your comments. Bye, guys.